I don't want to come across like we're saying, oh, expect to hire a financial advisor and it's going to cost you something to get used to it.
Mhm.
Like I would actually say that the vast majority of times when we run an initial financial plan with a client, we can pick out a few key areas of opportunity that do have some pretty immediate savings.
Yeah.
And
most of it taxes, a lot of it risk
taxes are
optimization.
easy because they're easy to quantify, right?
Yeah.
Like it's easy to look back and say, look at the tax bill that you paid versus what you would have paid based on what we did. Like it's very quantifiable. A lot of this other stuff is harder to quantify. Like what's the value of helping you confidently organize your estate plan, or the value of helping you go on that extra vacation and actually spend your money, or the value of these things are harder to quantify. Taxes are very easy to quantify. So a lot of times with DIY investors, and that's where they want to focus. I mean, DIY investors are not really sold on the emotional side of financial planning. Like they really are, like a lot of times these are logic driven people and they really want to like show me the dollars. So welcome to the Money Alchemist podcast. I'm your host, Brent Gargano.
And I'm your host, Ben Jones.
And we're here today to explore whether or not it makes sense to pay for financial advice.
Yeah, is it a ripoff?
And so today in this podcast, we're going to talk a little bit about how we as advisors look at the value that we deliver, what maybe you should expect when it comes to what you're getting as far as value from your financial advisor. And you'll just get to hear a little bit more about how Ben and Brent think about things. One of the things that spurred this conversation was that over the weekend, my wife and I, we went to a concert on Saturday night. We hired a babysitter. This all started with, we got quote unquote cheap concert tickets, right? So the concert tickets are $20. It's too cheap not to go, right? And so we got a babysitter on Saturday. We bought these tickets kind of last minute because the weather was nice. Who'd you go see? It was a Christian singer. It was Lauren Daigle.
Okay.
My wife likes her, and it was great weather, and it was outside of the stadium. And so anyway, we bought these tickets, and I was excited because it was $20 tickets, and we're going to go down there. She's going to have a nice time. And of course, we get down there, and parking is $40. And we get into the stadium, and you want food. Well, food's $20. And do you want anything to drink? Because that beer is going to be $14, right? And you start, and then, oh, by the way, the babysitter is like $25 an hour. So you start adding all this stuff up. And my, what was $40, $20 a ticket, $40 intro quickly ballooned to $300 or something for a night out at a concert.
Yeah.
Right. And so I guess the question is, if I knew ahead of time that it was going to cost $300, would I still do it?
Should have went to Jeff Ruby's, man.
Well, and I think, but the other side of that is, like, how often do we go to a Lauren Daigle concert outside? True. I mean, I think the memories, and we had a great time, by the way. Weather was awesome. The food was good. She really enjoyed herself. And so, like, what price do you put on that? Those memories. I mean, am I going to be more upset? Because in the moment, right, like I'm a financially oriented person.
Yes.
Okay. And this will tie into what we're going to talk about as we get into this. But like, people that are money oriented don't like letting go of their money. Right. But what is the money there to do? And you never, memories and like once you've experienced it, you can't ever take it away from you.
Yeah.
Right. And I think this is why so many people there's been this big push over the last 10 years to really spend money on experiences. Right. Because we start to ask ourselves this question of like, what is more valuable? And of course, the logical brain says something that, if you take a trip for $10,000 at the end of it, you're back home, your house is still the same, the trip's over and you have $10,000 less. Right. So was that a waste? Or will you remember that trip forever and you always have the memories and that's worth it?
Well, they teach you in the going through the CFP curriculum that I went through, if I recall correctly, they teach you that to never invest in vacations. That's the conventional financial advisor take is vacations are nothing but a waste of money. You're guaranteed to lose. So, and I think that's interesting because I find most people spend way more time planning out their vacation every year than they do planning out their finances. So it's just so anti, how the common mindset works. Most people, they that's their thing, man, that they live for that vacation. Yeah. They live for the leisure. But yeah, it's interesting that during this whole process, when you were going into the concert and sitting and listening to it, were you thinking about, was that in the back of your mind, the cost of all this?
Well, it certainly, we talked beforehand, I think the conversation we had was about why are they charging so much for these drinks?
Yes.
Is it actually to make more money on the drinks, or is it to actually discourage binge drinking? At these,
I think it's
concerts.
to discourage binge drinking because they do this at Kings Island. You notice, they sell, it's $15 for a pint of beer at Kings Island. Nobody's drinking beer. You see a couple people here and there, and you're like, well, they're not making money. They may make a lot of money on one pint, but they're not selling a lot of pints. So, that they purposefully picked a price point that's not designed to optimize revenue. It's designed to optimize, or they want it to be available, but at the same time, they don't want people to get out of control with it. So they do it to discourage overconsumption.
But back to the core question, right? Is a $14 beer expensive? Yes. Right. Is it also worth it? Potentially. Is it also valuable at $14? Potentially also yes.
Yes.
And I think that's the point. You one time in one of our podcast episodes talked about the value of a glass of water. And if I remember right, you said, if you're out in the middle of a lake, the value of having extra water is pretty low. But if you're in the middle of the desert, that glass of water is really valuable, right?
Yes.
And so
context matters. Yeah.
So anyway, but this all ties back to financial planning. Because I think one of the most common, I'll say, I don't even want to say misconceptions, but one of the most common perceptions of financial advisors is that it's expensive, right? Hiring a financial advisor is expensive and potentially not worth the money.
Yeah, I actually think that the DIY, so most investors, I think the CFP board did a study on this. It was like 2019. They found, if I'm not mistaken, the majority of people manage their own money. It's like so over 60%. And then there was also a Statista report that was more recent. It was in one of my recent newsletters that like 39% of individuals engage with a financial advisor. So the common, and I think the reason for that is because most people just think it's not worth the money, obviously. Because if it were worth the money, the majority of people, at least if that was the belief, the majority of people would use an advisor. And here's the thing, like I know, the different quality of advice that's out there. Most of it's not worth the money. It's not, So, let's talk about that a little bit. But real quick, I want to touch on high cost and what it does to perception. So that's why I asked you the question, like, was that in the back of your mind the whole time when you were at the concert, like, oh no, the cost of this, like, really just rains in your parade, man. It wrecks the day.
It doesn't wreck it, but and we'll get back to this later, but it definitely, you want to be there to have a good time.
Yes.
If you're going to spend the money and don't get in your head about it.
You shouldn't. Yeah, you shouldn't. If the cost bothers you so much that it reduces your quality of life and it kind of, you almost like reject it. It's like you just got a transplant and your body's just like rejecting it. I give you a story to tell you what I'm talking about. So last year we decided, my wife and I, normally we do like a budget vacation and we'll go and buy a lake house for a week or, on Airbnb or whatever my wife schedules it. I don't know how any of that stuff works. She just says, this is how much it's going to cost. But usually we budget, $5,000 to $10,000 to go on these we fund the whole family trip. But this last year, we did a blowout. We're like, you know what? Let's go to the Bahamas. Let's make this a real, like, once in a decade kind of vacation. So we flew the whole family out there, and we had ourselves a great time, except we didn't do all inclusive, and we don't do all inclusive. I don't drink. My wife doesn't drink that much, and that you could tell in the all inclusive packages it was like designed for alcoholics. They were expecting you to like raid their bar every day. We're like, there's no way we're gonna spend.
The mentality of if you already paid for it and you don't use it.
It ended up being like you had to spend like $200 a day per person in food and beverage for that to be worth it. So we're like, there's no way. Let me tell you something. Absolutely, there was a way. We got down there and everything was like way more expensive than you thought. So so it was just oppressive, the amount of like nickel and diming that happened. So not only would they have but get this. This is one of my biggest gripes, by the way. There should be no such thing as a mandatory gratuity. That's not gratuity. That's just adding to the price. That's just a price increase. Gratuity is, oh, I'm grateful that your service was so good. Here's a little bit extra. That wasn't it. They had a mandatory, it was like 20% or 25% gratuity. It was a lot. I remember it being like, wow, that's pretty bold to ask for that. Anyway, so they had, but they also have in the Bahamas a value-added tax, a 10% tax. So you had the base price, let's say it's $10 for a slice of pizza, which actually is pretty accurate for what you can expect down there. $10 for a slice of pizza. And then you got to pay the extra $1 for the value-added tax. And then the 20% mandatory gratuity was added on top of the value-added tax. You're like, oh my God, give me a break. So by the time it was done, all said and done, you're looking at 35% extra costs and all the menu items that were already inflated. So, and now when I think back on that vacation, and we're in the Bahamas, like you're supposed to have a great time, crystal clear water, like all I can think about is, yeah, I got ripped off the whole time I was there. That literally is the over.
And had you done the all inclusive, even though maybe you would have, maybe you wouldn't have gotten the value out of it, but you wouldn't have been in your head.
It would have been in my head.
It would have been a sunk cost.
Probably not in my head as much, but I still think that it would have been. I still would have had that feeling because because the all inclusive fee per person was exorbitant.
You once told me that the value that that you have financially made it when you look down at a restaurant menu and you don't worry about the price of the food.
Yeah. I think that's accurate. Yeah, if you're sitting at a restaurant and you can just order whatever's on the menu and you don't have to stress out about it, that's a sign that you're doing pretty well.
And it's interesting because I bet you there are people that have more than enough money to not have to worry about what the price is on the menu that still worry about. And that's really, I think when you just pivoting back to what we're here to talk about on the value of financial advice, I think it's really important to recognize that there's multiple dimensions to the value that we add, on one side. And as somebody listening to this, maybe you're not a financial advisor. So, all you can do is just trust us in what we say. But the interesting thing about being a financial advisor is instead of living, one or a handful of financial lives, we see hundreds, if not thousands of financial lives over time. So if you ask us the kind of impact that we see that advisors can make over time, we've actually seen these things with clients that we've worked with over a period of years where they've been able to take bigger vacations, buy more houses, nicer houses, put kids in schools they didn't think they could afford, use their money, whatever it means, more purposefully. Right. And so you've got really, like I said, multiple facets to the value on one hand, and where everybody tends to fixate is like, can you make me more money than the fee? Right.
Yeah,
so
that's what everybody wants.
If I charge you, if you have $1 million and I charge you 1% on it, and that's $10,000 a year, it's what are you going to do to save me $10,000? And I think it's funny because financial planning is probably the only industry where we actually expect to come out positive on the decision. Like you expect to get paid to hire a financial advisor. And I'm not saying that there aren't situations where that happens. Like I could list multiple I mean, I could go on about circumstances where we've saved, thousands, maybe even hundreds of thousands of dollars of taxes. And we've made really smart decisions that can by far outweigh any of the costs. But, and I tell this to a lot of clients that are thinking about signing up, it's like, even if I was a net cost, if I didn't save you as much in taxes as I charge you or what have you. Now it's, markets go up over time. You certainly hope their assets are growing in excess of your fees.
Mm-hmm.
What if I'm able to help you make better, more intentional financial decisions? And what does that mean in your life? You kind of get one life to live, and we see clients, hopefully through the planning process, I'll just use your example,
Mm-hmm.
go on the vacation and not worry about how much money the food costs, or not worry about what the house costs, or, whatever it is that's important to them. It's not our job to tell them.
Mm-hmm. So the big question is like, is the majority right? The majority of Americans out there that have means to invest, they do it on their own. Are they making the right decision? Are they avoiding a ripoff, or are they ripping themselves off? And your argument is that you shouldn't approach a financial advisor with the assumption that by hiring this individual, they're going to create an immediate alpha for you. And alpha is like a return above the expected rate of return. So for example, let's say if you're a DIY investor and you just put your money in the S&P 500, and they call it VU and chill. VU is the ticker symbol, is a Victor Oscar Oscar. That's the Vanguard S&P 500 index ETF.
Just buy it and leave it alone.
Yeah,
Can
so they
you
call
do
it
better than that?
VU and chill. So the assumption is, and by the way, nobody like explicitly states it when they come in and sit with me. It's not, I think that this is going on in their head prior to them scheduling a meeting with me. I think this is happening with, you might be listening. If you do your own investing, you're like, why? Maybe you're trying to get some free advice to apply in your situation from here. And I hope you get something. But you're never going to get out of listening just to this podcast, which you would get if you sat down with me and Brent and one-on-one. We'd blow your mind. We'll play it. But no, I'm not done yet. So, the expectation is that you hire an advisor, and they're going to, like, if VU is going to give you 10% per annum over the next decade, your expectation with an advisor is you're going to get 11%. And what we're saying to you is that's the wrong question to ask. The value you get from working with a professional advisor is a lot like the value you get in working with a trainer. So when you work with a trainer for physical fitness, you're not going to say, okay, well, I'm going to measure it by my bicep circumference. Like, my bicep circumference, if I do this on my own, is going to be X. And in my bicep circumference potential, if I do it through you, is X. It's the freaking same circumference.
If you do the same exercises, you're going to get the same thing.
One thing's absolutely true is that if you work with that trainer, you are going to be there. You're going to be held accountable. What do you call it? Your accountability buddy. Because you're going to have a human being who's lived the life, that's lived the experience, that can give you immediate feedback on whether you're doing the right things or the wrong things. I actually have I tried to cheap it out with my physical fitness one time. I did the P90X. I was a poor millennial. And then I transitioned over to this thing through Jeff Cavalieri called AthleanX, which, by the way, just kicked my butt. But also, one thing that my criticism of this program is it was very light on the warm-ups and cool downs. So I didn't do that because I didn't know the importance of this stuff. I credit that program for completely wrecking my back. And I had to have literally a $20,000 back surgery later, which I would have been better off just hiring a physical fitness trainer. So DIY is not the cheap. In fact, DIY a lot of times is the biggest ripoff.
Yeah, and back to your alpha point, like I don't want to come across like we're saying, expect to hire a financial advisor and it's going to cost you something and get used to it. Mm-hmm. Like I would actually say that the vast majority of times when we run an initial financial plan with a client, we can pick out a few key areas of opportunity that do have some pretty immediate savings.
Yeah.
And
most of it taxes, a lot of it risk.
Well, taxes are easy because they're easy to quantify, right?
Yeah.
Like it's easy to look back and say, look at the tax bill that you paid versus what you would have paid based on what we did. Like it's very quantifiable. A lot of this other stuff is harder to quantify. Like what's the value of helping you confidently organize your estate plan, or the value of helping you go on that extra vacation and actually spend your money, or the value of these things are harder to quantify. Taxes are very easy to quantify. So a lot of times with DIY investors, and that's where they want to focus. I mean, DIY investors are not really sold on the emotional side of financial planning. Like they really are, like a lot of times they're logic driven people, and they really want to like show me the dollars. And but I will say they tends to be that these people also have enough confidence that they kind of don't know what they don't know. And so inevitably when we get on an initial meeting, we do know what they don't know. And so there are a couple of things, and it's pretty common to be able to pick out a few things that can quickly save, a lot of money. But what we are saying is, besides just that, we can tell you out of experience working with the families that we work with that these people do, through the planning process and through the conversations that you have, they're able to take a deeper breath. They're able to use their money on things that they want to use their money on, and they're not so afraid. You kind of give them, it's not like a financial plan gives you a budget that you have to stick to. It's really like a spending plan. It's permission to go spend your money.
Yeah. I just met with someone yesterday that actually came over. I don't know if we should name names here, but I'm going to, because I'm feeling saucy today. Not client names, but the name of the company they were working with. So they were working with a Fidelity advisor. Oh, so they were sitting down with someone. I'm not sure how they do their financial planning or what planning software they use, but they told this client of mine, that it's a recent client, that she couldn't retire. And I did just I call it my eyeball financial plan when I initially meet with them. That's when I survey they have their budget. They tell me what they're spending, and I look at their money, and I just crunch the numbers in my head. I've done enough financial plans where I can pretty much say with good accuracy, like directionally, if you're on track or off track. And this lady was so far on the on track side of the equation that it was no question. Like, you absolutely can retire. Let's go into the numbers and I'll prove to you that it's possible. But it blew my mind that this individual was told by another professional that she couldn't retire. She didn't have enough money. So ends up she did. And in fact, and I do want to come back on that, because that I do have a point to make with that. But back to what her training had told her, like what that had conditioned her to believe is that I need to watch my pennies. And her problem was actually that she is going to end up, if at her current trajectory, unless she figures out how to spend an extra 20 grand a year, she's going to end up with like an estate planning issue. She's going to end up giving a lot more money to her kids than she probably would mean to. And that's even including like a long-term care assumption in there too. That was quite aggressive. So I think that a lot of people go into their retirement very cautious with their spending for a couple reasons. One is I think the industry's trained them to do that, because it's in the industry's interest that they maintain the money in the portfolio, because that's how that's how you and I, frankly, we earn a lot of our fees if the client grows their accounts. So we are directly incentivized
to make sure you have money.
You don't spend your money. So financial advisors, and not just advisors, I think advisors don't do a better job at combating this, because we work on the 101 level, and it's very human. But where it's not human is the Vanguard or the Fidelity call center to the individual. Of course, they're going to incentivize you to keep as much money as possible invested with their funds, because that's how they make money. There's a direct conflict of interest there. So they're going to design their planning tools to be incredibly conservative. and they're going to brainwash you into believing that you don't have enough and you never will. Now you're shaking your head, so you disagree, but
as somebody that, I worked at Fidelity, I've kind of seen the inside. I don't think you can always paint with the broad brush that like the company controls everything. The company sets some level of the culture, but speaking just as somebody that came from Fidelity, I had people over there that I knew that were really great people, and I don't think would ever put their interests over the clients in that way or whatnot.
I'm talking about the marketing message.
Well, but all of us do that in some way, right? Like we want to leave clients with a financial plan that ensures that even if the market tanks, right, like realistically, our financial plan should account for the fact that like you can't control markets. They're going to go down sometimes, and you're going to be invested through that. And so I've got to build a safe enough plan that allows that to happen. And truthfully, that safe plan in the vast majority of scenarios ends up with you passing away with a chunk of money.
Yeah, right now there are ways to mitigate that. I'm not going to get into the complexities of financial planning, but there's just no way that this particular individual, and I've encountered, she's not alone in this. I've encountered a lot of other clients have had similar stories.
I think what you're talking about is really like, I've got a great story around this. Actually, I had a client, their old advisor had, for years before they retired, had been coaching them on their finances. And then the client retired, and I got involved in the picture and started asking some deeper questions. And this prompted the client to go back to the old advisor and say, hey, maybe we should rerun a financial plan. So the advisor said, I think that's a great idea. Let's go revisit it. Right now, mind you, this advisor had originally run the plan, told him you're on track to retire. Everything's fine. Go ahead and retire. The advisor was watching them retire, was involved in the whole process. And then after they retire, they asked to revisit the financial plan. And about a week later, they get an email back, and it has a financial plan attached. And then it has just a lot of writing about essentially how concerned they are about the clients. Just what you're saying. Oh my gosh, you're stuck. You should not have retired, and you need to make dramatic changes. Okay. And so of course I get the email, right? So I get, client forwards me this thing. And so now all of a sudden I've got to look at this and go, okay, like what assumptions are in this plan? And I guess the bottom line, without going through a whole lot of details, is there were some flawed assumptions. And by the way, when you're running a plan that shows 40 years of data, a 60-year-old, if we're running a plan for a 60-year-old, we're often looking at a 30 to 40 year planning horizon. A little bit of something that's a little bit off can make a big difference. And in this case, I was able to go back to the client and say, yeah, here's the problem. They got this assumption wrong. They didn't build this in. This wasn't built in right. And turns out like, yeah, okay, you can't retire and just never have anything to worry about. Like there are things that we will have to practically do, but you're going to be fine. And I guess my lesson as the advisor in that is, if you're going to send the client a plan that tells them that they're screwed, that they're screwed, like make sure you double check your work.
Yeah.
Right.
Oh, no doubt.
Like you're sending this to a person. What is that person supposed to do? They already retired.
So let's like take a minute to just talk about the variability and quality of advice that you get out there. So I have had the privilege, if you want to call it that, of encountering a lot of my colleagues' work, because now, granted, most of the people that we get from other advisors, they're disenchanted. Obviously the advisor,
they're only coming to you because they don't have a great experience with the current.
So it is a little bit filtered. Like maybe my opinion is biased. Like the police, like there's a common thing. Like most police think that the average population is terrible because that's all they see. There's actually a story of an undercover cop who I just heard this on through this podcast my kids listen to, called Be Amazed. Great podcast, by the way. But he talked about this undercover cop that pretended to be a homeless cripple in front of a drugstore, and it was for a stakeout. But why he did this, he decided to entertain himself by pretending he was blind, and he had a cup that he took donations from, and he thought by the end of the day I'm gonna have less money in this cup. And what he found is that actually most people, they not only did they not steal, but they put more money in because he was blind. So he ended up with more money in the days he pretended to be blind than the days he didn't, which was funny because he thought, as a cop, he thought, I'm going to get robbed blind. But it ends up that it's the majority of people are actually quite good. So anyway, I digress. What I meant is that, like, I see kind of a biased sample of people, but I see just a lot of advisors that, like, I'm like, my gosh, man, you're not doing any favors in the industry. You're really giving people some pretty lousy advice. And I think that sets the stage for this perception that it's quite foolish to engage with the financial planner because, Warren Buffett said that all they're doing is taking an override on your money. Mm-hmm.
Well, and I think so one of the beliefs that I have is that getting back to the antithesis of the client here is like, you have I'll just pick on engineers for a second because I actually work with a lot of engineers. I tend to like working with engineers, but you get an engineer, and engineers tend to be pretty money savvy. They care about their money and they're attentive to it. Like, they like the details, right? So you get an engineer that's pretty convinced, they understand money, they're saving, they're investing. What do I need to hire an advisor for? I've got this covered. That's a waste of money.
Yeah.
I think when that person, and I don't actually say I think, I actually know this because I have seen these people go through this transformation. Once that person actually really understands what good financial planning looks like, they understand why it's valuable, why there's a cost to it. The distinction I think that's important in my mind is that, just like you said, and I see it too. I mean, there's a lot of crummy financial advice going on around there, whether it's slinging insurance policies and annuities, whether it's giving people bad advice on taxes, whether it's, just investing people inappropriately. I mean, there's, there are countless kind of things that get missed, balls that get dropped, but really the value of being able to kind of DIY, I believe, isn't that you don't need a financial advisor. It's that you now have the competence to recognize the difference between a good and a lousy financial planner. And that is worth a lot of money because, again, back to your story of the woman that was able to retire. I mean, I have a client who's probably listening to this. And, one of the things I'm proud of in working with them is that they always had this thought process that they would retire when they got to $6 million. And I kind of just asked the question of why 6? And that question led to a lot of further planning that really actually showed. And by the way, that person was on track to retire in their, let's say, early 60s. And through planning, we actually ended up helping them retire in their mid 50s. And soon after retiring, this person's father got sick and passed away, and they were able to go spend that time with their parent in the last few weeks. And I got actually a really nice text from the client about the value of that and how that wouldn't have happened without some of the choices that we made. And so again, I kind of go back to there's kind of 2 parts to the value of a financial planner. I mean, part 1 is, hey, let's save you taxes. Let's invest your money right. Let's do all of the things that we need to maximize your money. But then the other part is really like emotional. Back to that person that's the DIY engineer. Oftentimes they're really good at saving money. Like, they're really good at saving money. They've wired themselves to save money. They've wired themselves to be aggressive investors and stay invested. Well, all of a sudden they get to retirement and the goal isn't to save money anymore. Like, if money is the means to the ends, like, when do we get the ends? And so I think what we often see for those
what
people,
are the ends? So that's a very difficult question. What are you supposed to do? I actually met with a guy, it may have been a couple weeks ago, and he asked me that question. I was like, well, because I ask everybody that comes and sits with me, like, what are the top 3 things that you want to walk away with today? Because I'm not here to waste time. I don't want to just give you a big commercial. You're here for a reason, and I'm going to make sure that reason is satisfied by the time you leave. And actually, it was the first time anybody's ever brought this up as one of those 3 points. He said, I want to discover the meaning of my money. And I thought, man, someone went to my website. That's what I thought. Sorry, I'm like, my throat is kind of funny because I had the coronavirus last week. That was a lot of fun, let me tell you. Fully recovered now, so not contagious.
Hope so, for my sake.
But I was like taken aback by that. And that is a really challenging question. And I think that it's very difficult to answer that in one meeting. We definitely started on the topic. We started down the road of discovering, okay, what is the meaning? What is your purpose? And we have questionnaires. A lot of it's just discussion, open-ended discussion. I think that what financial advice is turning into more and more and more since I've been in the business, especially with AI today. One thing AI will never do is it's never going to satisfy that relatable component. I think that people will generally not use AI as their sole financial planning solution because the AI has no lived experience. It's never been human, never will be human, doesn't know what it's like to be you and to feel like you and to feel emotions. And these things matter because money is subjective to the human experience. All value is subjective to the human experience. That was the point of the glass of water example I brought up in the last episode. And emotions are everything. Emotions are everything. Like you talk about that mechanical engineer. Now this is stereotypical, but this is a typical engineer. Is someone who just likes to see number go higher and doesn't ever want to spend a nickel of it because it's the satisfaction is in the mechanics of wealth building, and the mechanics are much more satisfying when they're growing, not shrinking. So engineers have a difficult time, in my experience. Well, those really and it's not just engineers. I'm picking engineers. Let's just say the very logically minded person.
Yeah, it's logic.
The very logically minded person has a hard time spending down assets because of I think it's emotional for them.
And that's what I'm saying is like everybody gets different value from, I don't want to say there are definitely common threads to the value you get from an advisor, but like when you sign up when I have a client that signs up and they ask, hey, Brent, what are you going to do that's going to add value for my life? My answer is kind of, I don't know for you specifically at this point, but I can tell you that for every client that I work with over the process and over the course of time, we recognize areas where there are concepts and things that we can do that will deliver value in your life, whether that's the value. I mean, I could go through the list, the value of the importance of liquidity, the value of the importance of increasing your income, the value of the importance of not hoarding your money.
Yeah.
And so everybody eventually maybe comes away with their own unique takeaways as a product of this process. But the process is really like just helping you visualize. Like visualization is a really important thing. I think we've talked about this before, but supposedly Michael Phelps, before he goes and swims, he like closes his eyes. So if you see him sitting on the side of the pool, he's closing his eyes. And what he has said he's doing is he's actually visualizing his swim. Right. He's kind of in his head running through it play by play. And there's something so important to being able to do that because it helps you really kind of see the practicality of what actually is going to happen, not live in that kind of state of fear. And the process of doing that in the plan, back to your example, the person that wants to see number go higher, is that hopefully now they can retire and do XYZ, name a thing, whatever it is that are the ends for them. And they can do it with confidence and they don't have to look back and they have somebody to kind of hold them accountable for what they said they're going to do. And sometimes what they said they're going to do is actually use their money. So I don't know, I could go on and on about this for a long time because again, I think when you're listening to this, you think, oh, okay, Brent, whatever, it's great. These clients are doing cool things.
Seems a bit self-serving.
but I think like having seen, and I could go down the list of situations like helping people make decisions in their life that they would not have otherwise made is probably one of the most valuable things that we do. And a lot of times it is actually not additive to the balances in their accounts.
Yeah, it's not. It's hard to quantify. A lot of it's qualitative. I would do this for free if I could. I really would. I love the act of like optimizing the way people feel about their lives and their money. I don't like it when people waste. There's a couple things that irk me that are happening right now. One of these is online gambling. It's the scourge of a generation right now. It's the podcast I just plugged. Be amazed. Who do you think his primary advertisers are? It's all these like online gambling sites. It's so predatory, and it's what a waste of money that is. I looked at my kids because we all listen to this, and we hear that commercial, and I try to fast forward them because
you don't want your kids exposed to it.
And I basically looked at them today. I said this today. I said gambling is for idiots. That's what I told them. So I'm sorry if you gamble, but it really is stupid money. There's a reason why.
If you look statistically, people with wealth gamble less than people that don't have wealth.
I'm shocked to hear that. Let me tell you. And by the way, I've never met someone that goes to casinos habitually that's behind. They're all winners. So I ask them. I just added it's like a weird sadistic thing that I do. I'm like, so are you ahead or behind in your gambling career? And they're like, oh man, I'm ahead. A few actually self-aware enough to like, yeah, I'm way behind, but everybody's ahead, which is ridiculous. So the other thing that's a scourge is day trading. I get on X. Like X is one of my it's like pseudo information, but it's like junk food to me. But I follow nothing but finance guys and girls. And there's a couple traders. Actually, I find them to be very entertaining because they never put anything material on their X. I noticed this, that they all claim that they're expert traders, but they're all selling Substack subscriptions. So I have to pay to get their trading advice. I have to pay them like $100 a month or something. And, but they never put any like free stock tips on their X. It's always just memes and jokes. And which I find to be kind of funny, and I like them for that. Some of them I recycle in my newsletter, but I'm like, isn't that interesting? Why don't you give me put your money where your mouth is? Just tell me in the next hour, what's going to be the trade that really is profitable.
I think the nail in the coffin for that one is if your trading strategy worked so well, you wouldn't need to sell me a Substack subscription.
They all do now here's the thing. They're very effective because I read their comments and anybody that tries to criticize them, like you actually are no good. They are very good at attacking these people with technical information and stuff and making it and they basically just boil it down to, well, you suck at trading and I don't. And I truly, some days I walk away from that, reading their commentary thinking okay, maybe Ben, you're just an idiot. And there is a secret sauce that you just are too dumb to understand. And that's possible.
The guy that knows it is out living on his private island somewhere, not selling you a subscription.
And it's why is Warren Buffett, one of the wealthiest guys in the world, not espousing day trading if it's so effective? So to me, I think it's just a bunch of bull crap. And I think that it really is just attention farming at the end of the day. They're just trying to hey, look at me, buy my Substack. That's what they're doing. But anyway, I think
I think it's important to mention, we sit here and talk about the value of us as advisors. And we talk about, I could sit here and give you a case study where we saved, a client $100,000 in taxes on their charitable giving strategy and sound really great. But it's, the easy thing to do would be to say, hey, hire me and your performance is going to be great. I'm going to trade things for you. I'm going to move your account around such that you're going to beat the market and The problem with that is it's not realistic.
No.
And the people that sell their services, their financial planning services that way, they're not setting clients up for success. They're not building a good business. If you start talking to a financial advisor and they're selling their services on performance, you're probably not talking to the right financial advisor. And I think it's just important to recognize, we could come out here on the podcast and really flex, here's what we do to save clients money. Instead, we're sitting here saying, look, all that is great, but here's really where some of the real value is.
Imagine talking to a carpenter and they're selling the quality of their service is premium. You should pay them double the price because of the quality of the 2x4s they use. It's the same 2x4, and that's the thing. Like you look at some of the best active managers out there that you hear the statistic, like 70% active managers underperform the index. Entirely true. Entirely true. There are still some active managers that do outperform, but the outperformance is not much. You're talking like basis points, over long-term averages.
Yeah. For the listeners that don't know what this is, if you actually look and if you actually look at like all the different mutual funds that try to invest in the same kinds of companies as, let's say, the S&P 500, the difference between the best one and the worst one is like not a lot. It's like fractions of a percent.
Yeah.
Right. And so time and time again, there's data that shows trying to beat the market isn't really the game. But anyway,
it's not the game. Now, I do think that there are some points to be made about like optimizing for risk-adjusted returns, and that sort of thing. I actually have one of the better active managers, David Drew. He manages the T. Rowe Price Capital Appreciation Fund. Phenomenal manager. I got dinner with him tomorrow, so I'm going to ask him some questions about this. How the active versus passive management landscape is changing and all that. But it'd be a good podcast. It's going to be a good topic to talk about in the next podcast. But what I really want to get at is like the value that we create for clients is more qualitative. So just giving people the confidence in their futures. And I'm not just talking about for retirees. The value proposition there is obvious.
Well, I think this is actually hugely impactful for young people. I mean, how many people live their whole life through their 30s, 40s, and 50s, pinching pennies and scraping by? Like what kinds of things do you want to do for your children? What kinds of things do you want to do with your spouse? Like these are all things that we're foregoing for the benefit of our future. And I'll tell you, when we sit down with a lot of young clients, especially the ones that are good at saving, the ones that care about saving, that are foregoing these things, they're actually like more than on track. And so what's the benefit? You eventually retire at 65 with more money than you need. And what didn't you do along the way that you could have done had you had somebody helping guide you on what you're capable of doing?
I want to give you an example. Just happened this past week. And for any clients listening, I want you to lean into me and let me, or if that can add value, don't keep me a secret. Let your, extend my services to all of your family. And I'm not trying to say I'm going to like for a fee or anything like that. Like it's just part of the package. I spoke with a granddaughter of a client this last week, and she is 18 years old, completely just lost, just riddled with like anxiety about her future. She doesn't know what she wants to be. She's like getting bombarded with information from all these different, I feel sorry for young people these days because, they're getting just absolutely abused by social media and influencers and all this stuff.
Their attention spans are being sold every which way.
Oh my God. It is awful. They have no chance because these companies like Instagram and TikTok, they've got it down to a freaking science how to make you an addict. They don't call you users because they, because they value you as a person. They call you users because they think that you are a drug addict, just like some street pusher. That's how they treat you, I think. And I think social media is just the scourge, or it's the ruination of our times. But
please go ahead and visit the Infinite Wealth Planning Facebook page while you're at it.
Yeah. I'm not trying to say it's all evil, by the way. I think there's uses, but I think that it's, anyway, I'm not going to get into that. But this poor girl, she just is like clueless. Like all she knows is she wants to be an influencer. Where do you think she got that idea? I wonder. I'm curious. But now
my daughter wants to be a YouTube star.
Yeah, all right. Suckers born every minute, right? But but someone has to be there. So I don't want to at one hand, I don't want to discourage them from truly trying to do what they want to do. But at the same time, I don't. Let's be realistic about it. Let's look at how many people actually want to do this versus how many people can actually do this. But back to this girl's case. So she wanted one thing. She has She has no money, no job. And here she's weighing a decision on whether she should pay $2,000 to this like local modeling agency to go through like, modeling classes and how to be an influencer. All right. Capital SCAM. Can I tell you, kid, you're getting scammed. Like, all I did, I asked her, I talked to her for 45 minutes about this and other things too. But, the clear message was like, don't do that. I had her text me the link for the company that was offering this offer. And I basically just went into Grok and I said, Grok, give me a full, company profile on this and whether the deal's fair, and give me a list of alternative agencies in Cincinnati. It came up with everything. Basically, the company it's a company that preys on young kids like her that are clueless in what they want to do. And they're basically just pocketing the money, patting them on the back and sending them away. It really, it's kind of a scam, but it's not a scam. So it's one of those like right on that, it plays in that gray area. It's just very questionable. It's Reddit complaint worthy. And then you have all these other companies that I basically said, good news is it's not entirely a scam. Bad news is you got homework. You actually, what you need to do is you need to call every one of these agencies. If you want to be a model, put in the work. Find out what company is going to serve you the best. And that's like, who else is going to do that for you? So that's feedback you get. That is valuable feedback. I mean, that borderline parenting feedback, but it's still, sometimes I think that kids lack that type of direct, like, this is the real world kind of advice, because parents kind of want to be friends to their kids these days. So, I think that you can get advice from that when it comes to launching a business. I get a lot of clients that want to be entrepreneurs. They're not quite sure how to do it. One of the things that we do in our business is, I manage an RIA with about, we've got about 12 independent advisors and then a growing staff. And then a lot of times financial advisors from captive companies like Edward Jones, Fidelity, even Merrill, even people that aren't in, that just want to become financial advisors. They'll come meet with me, but they're not quite sure how to bridge the gap. Like, how do you move from a salaried, comfortable position to a position where you are entirely independent. You are your own employer. Like that's a very tough jump to make. And you really need to have someone that walks the walk, that's been there. I don't think you should do that all completely on your own, although it's possible. There's a lot of people, serial entrepreneurs that are so competent at it. But I think that working that out through an advisor and a coach can actually be invaluable, qualitatively speaking.
And that kind of demonstrates one of the points that we talk about a lot on here, which is, again, you and I get to live thousands of financial advice or financial situations. We have seen clients start businesses where it's gone well. We've seen clients start businesses where it's gone poorly. We've seen these different things. And so we know kind of what are the characteristics of people that set up successful businesses. What steps do you need to take to make sure the business is set up the right way, to make sure it's easy to track? How do you hire a CPA that's good for that? So again, it's kind of drawing on the collective experience that we have in dealing with a lot of those situations to make sure that you know what you don't know.
Yeah.
So I think back to the core point, the core question, is it worth paying for a financial advisor?
I think the resounding answer is it depends. If you have the right one, and to know if you have the right one or not, it really is quite simple. If it feels like a ripoff, it probably is.
Well, and if you follow our podcast, we talk a lot about what expectations that you should have of your, like, what should your advisor be doing for you? And it's really important that you don't just kind of put blind trust in somebody. I think that there's an element of trust but verify. There are a lot of great advisors out there. There are a lot of great benefits, to a financial plan, to tax planning, to estate planning, to investment planning, to insurance planning, and all the things that we help people piece together. But while there's immense value in doing it right, there is immense waste of cost if you do it wrong. And whether you are somebody who already understands a lot of the core tenets of personal finance or you're totally clueless, I think it's important that you do just a little bit of due diligence in making sure that you're working with the right people, and then really leverage them and work with them to help deliver better outcomes for yourself.
Mm-hmm. Well said. Well, with that, I think we should put a cap on it.
All right. Well, tune in. Please feel free to tune in next time we release these.
Make sure to smash that like button.
Yeah, you bet. And we do these about every 2 weeks.
Yeah.
We are ad-free, so I don't know what other podcasts you listen to, but we have made a point not to add ads to our podcast. We hope that delivers you maximum listener value, and we appreciate you.
Opinions voiced in this podcast are for general information only and are not intended to provide specific advice or recommendations for any individual. All performance referenced is historical and is no guarantee of future results. All indices are unmanaged and may not be invested into directly. Investing involves risks, including the potential loss of principal. To determine which strategies or investments may be suitable for you, consult the appropriate qualified professional prior to making a decision. Advisory services offered through National Wealth Management Group, LLC.